If you're a current or former SpaceX employee, the moment you've been waiting for is finally here. And now the question everyone is asking is, when can I actually sell my shares? And the answer to that is a little more complicated than most people expected. Hi, I'm Babin, certified financial planner. And today I want to walk you through what the SpaceX lockup schedule actually looks like, what it means for employees and alumni, and why understanding the timeline is just as important as understanding the IPO itself. Now, traditional IPOs make their shareholders wait 6 months after the IPO before they actually have access to their shares. But based on the S1 filing, SpaceX is using what's called a graduated lockup schedule. So instead of one big release at the 181st day mark, the shares of eligible employees and alumni become tradable or sellable in stages over the next several months. The goal here is pretty straightforward. Rather than flooding the market with millions of shares all at once on day 181, the company is gradually increasing the amount of stock that can be sold. That helps create more orderly markets while still giving employees and alumni opportunity for liquidity. So let's walk through what the actual timeline looks like. So the IPO priced at $135 a share on June 12th, and its first live trade was around $150. It was one of the largest offerings in history. And with the stock now trading publicly, the questions have shifted from when to what happens next. But for stockholders, the IPO didn't necessarily mean anything changed for them. Shareholders still remain subject to the lockup period, even now that the stock is trading publicly. Now, the first meaningful opportunity for selling comes after the second quarter earnings release, which is expected in early August. Beginning on the second full trading day after the earnings, up to 20% of eligible employee and alumni shares become available for transfer and or sell. So they use the word transferable, and that's kind of just means you can sell and or potentially move them out. That's much earlier than the traditional 6 months lockup that many investors are familiar with. There's another interesting detail built into the filing. If SpaceX performs exceptionally well after going public, specifically if the stock trades at least 30% above the IPO price, which is $175.50 for anyone doing the math, for 5 out of 10 consecutive trading days, an additional 10% of eligible shares could unlock early. So in other words, strong post-IPO performance could accelerate part of the release schedule in early August. Now, after that first release window, additional shares unlock gradually. We've got a 7% unlock at day 70, a 7% unlock at day 90, a 7% unlock at day 105, day 120, and finally day 135. So again, instead of one massive liquidity event, employees and alumni have multiple opportunities to decide whether if they want to sell or how much they want to sell over the coming months. Now then comes the final major milestone, which will be after the third quarter earnings release, which is expected sometime in November. Another 28% of your eligible shares become available for sale and or transfer. And then finally, around December 9th, the 180th day will have passed and all of your available shares will become available for you to do what you want with. Now, that's the traditional lockup expiration that most people recognize, but in this case, it's really just the final stage of a much longer release schedule. Now, here's an important distinction to be aware of. Not everyone is operating under the same rules. According to the filing, Elon Musk and certain major investors are subject to a separate 366-day lockup. So while employees and alumni shares begin unlocking over the first 6 months, those founder-level holdings remain restricted for roughly a full year. That distinction helps maintain long-term alignment while allowing employee liquidity to happen gradually. And now, what does that mean for you and your equity? Now, as a financial planner, here's what I would encourage every SpaceX shareholder to remember. Having a thoughtful strategy before those unlocks happen can make a meaningful difference. This is where tax planning, diversification, cash flow needs, and long-term financial goals all come together and to build a plan for your shares. So for many shareholders, this moment is going to represent the single largest financial event of their careers. So have a plan in place for that. If you're a SpaceX employee or alumni and you'd like to talk through your equity compensation, tax implications, or build a personalized strategy around the graduated unlock, I'd be happy to help. Schedule a free 30-minute explore meeting with me at babinwealth.com/SpaceX.